Hi, Brian here with Remy Emerson. Wanted to send out this quick video email to you to give you some updates on the real estate market here in Central Florida. I have a ton of information I'd love to share, but I know you didn't pop open your email looking for a 45-minute presentation with charts and graphs and everything. So I'm going to stay focused on home values. And I do have some information I'd love to share about rent rates and what we can anticipate on the supply side of the real estate and rental real estate here in Central Florida the next year or two. And I can do that in subsequent emails. But if you'd also like some more information after we're done here, you can click on the blue button that says schedule a Zoom. And I would love to do a one-on-one Zoom call with you to give you some more information that I have and perhaps help you figure out a way to strategize to get more Central Florida real estate into your portfolio. Because the upshot is that we are in a buy period right now. This is a great time to buy Central Florida real estate. We are in the bottom of a deep bottom cycle. And as our market cycles go up and down, but not every up is the same. Some ups are higher than other ups, and not every down is the same. Some downs are really down. And I'm telling you, we are really, really down right now, but it's a little bit hard to see. And you're like going, oh, watch the prices. Home prices are steady in Central Florida. Yeah, they are kind of steady, but the dollars are not steady. The dollars have tanked. So the values of the homes in Central Florida have plummeted, even though the dollar values have stayed relatively the same. When you look at it, we look flat, but we're not. And the way we can really decipher this is by taking these home prices out of the US dollars and put into gold. And the reason that we need to do that is because the dollars have lost so much value. And I'll show you a quick graph here and explain why. I'm sure if you watch any news at all, you know that our government is printing all kinds of money and always and has been for several years. And this is not about politics. This is strictly about math and the effect that math has on our US dollars, as well as the opportunities it presents us. So this blue line is the amount of US currency that's been in circulation. This graph goes back to 1960. This is from the Federal Reserve in St. Louis. You can go look at the graphs for yourself. They have a ton of really interesting stuff there. And you can see that we remained fairly steady. And in 2010, we started getting a little crazy printing money. And then in 2020, we went berserk and printed $19 trillion. That's a 375% increase in the amount of US currency in circulation. So if you take any commodity, take diamonds, for example, and all of a sudden you flooded the market with 375% more diamonds, the value of diamonds is going to go down. So a huge diamond discovery happens tomorrow, and all of a sudden there's way more diamonds than we've ever had in the whole history of the world. Diamonds are going to become worth less. And that's what's happened to our dollars. We suddenly have 19 trillion more dollars than we've ever had in circulation before. And now our dollars are worth less than they were. So one way we can really examine the value of these homes is to convert to gold in our thinking. They're using the gold standard. Now, gold we use because it has always been the standard worldwide since the beginning of time to evaluate the value of goods and services. So if we convert these home prices to gold ounces, we can see as the real values of these homes go up and down. So I won't go over this whole chart year by year, but let's look at 1980. It was a year not unsimilar to where we're at right now. We're coming out of a period of high inflation and really high interest rates, and the economy was sluggish, and the home prices were for a Florida average Central Florida home was $62,900. That was 103 ounces of gold. So as you can see, as the 80s took off, if you were alive in the 80s, it was a great time. The economy was good. The dollar was strong. Real estate was good. And in 1989, we kind of hit a peak, and we were up to $102,300 for that Central Florida average home. And that equated to 269 ounces of gold. So going from 103 ounces of gold to 269 ounces of gold is a pretty good indicator of what it was like to go from 1980 to 1989. Definitely got a lot more value added into those homes. So we didn't have a really big swinging cycle in the 90s, but let's come fast forward to 2007 because things were really interesting there. In 2007, it was awesome. Everybody was making money in the real estate business. Life was good. We thought it was going to last forever. and homes were going for an average of 368 ounces of gold, which equated to 256,000 US dollars. You can see in this column C here, we'd had several years of double digit and near double digit um, growth in dollar value of these homes, and kind of the same thing in the gold. And we got up to 368 ounces of gold, and then we woke up in 2008. Of course, everyone knows the bottom fell out of the real estate market. We actually had double digit decreases in actual dollar costs of these homes. But people, always look at 2008 as being the horrible year for real estate, but it actually just was the beginning. It got worse, and we wallowed and suffered until we got to 2012 is when we really hit rock bottom, and homes were going for 116 ounces of gold, which equated to 193,000 US dollars. We still hadn't started printing money yet. I mean, this is before we even started printing money, but you can see how the values related to the gold. Everyone knows it was bad in 2012. And yes, you can see that in the gold price. And so let's go fast forward to 2022 now. The cycle obviously repeats itself as it always has, and it always will, right? So in 2022, life was good again. We'd had a couple of straight years of double-digit growth, and the average home price in Central Florida was up to $395,400, and that equated to 219 ounces of gold. And we were just getting started with that printing press, printing those dollars, and now a couple years later, we've cycled back to the bottom. It's 2025. That same house is now $405,000. So you're going, well, it was $395,000. Now it's $405,000. But the fact is that $405,000 isn't worth near as much as that $395,000 was worth back in 2022. In fact, it's a 53% loss in value. So we are now at the lowest number I've seen, going all the way back to 1980, at 101 ounces of gold to buy your average Central Florida home. And this is a cycle. It will go back up. It will recover. Our wages will catch up with this inflationary period that we're in right now. We will get a handle on the inflation. We pray they'll quit printing money, and these we will recover, and these home prices will go back up in value, in the equivalent value to gold. So since 1980, the average price of a house in ounces of gold is 258 ounces. So if we recover at to 258 ounces of gold, that would mean that Central Florida home that's $405,000 right now is going to be worth $1 million. And you can say, well, Brian, the gold, that $4,000 gold number is inflated. It's all got a lot of hype. Everyone's getting on the gold train right now. So that's going to draw back. Okay, let's say it draws back to $3,500 an ounce. It's not going to go back to $200 an ounce. That ship has sailed. So let's say it goes back to $3,500 an ounce. That's still $900,000 for that average Central Florida home. So this is where we're headed over the next 9, 10, 11 years. We are going to recover. These values are going to come back, and these homes are going to be worth a ton of money. So I would encourage you to really put some thought into this. Make a Zoom appointment with me, challenge me on these findings. I'll just be happy to discuss it more. But what's more important is we can also get a strategy on what it's going to take to buy homes right now, because that is the hard part. It's hard to find a deal at this interest rate right now that will cash flow for you, because rent rates haven't skyrocketed as much as the interest rates have and the taxes have. And I know there's a little bit of gap there between the rising expenses and the rising rent rates. So I can talk in the future about the rent rates and where I think they're going to go. But right now, I'm telling you, is the time to buy Central Florida real estate. If you're thinking about selling, please do not sell right now. This is not the time to cash it out. You're going to regret it in 5 to 6 years when you see what happens to these home prices. So please feel free to schedule the Zoom. I'd love to talk to you in more length about this and help you get a strategy to go find some homes. There are deals out there, and we can get you started on the pathway to finding some of those deals that work for you. Thanks.